Good morning, Steve Reed in Chicago with the morning grain comments. Markets are trying to recover from yesterday's losses, and we're seeing a little bit higher stock market with bank earnings and lower rates offering support. The dollar's lower, and crude's trying to get back to the recent highs on concern about lower supply versus the demand, especially this winter. Over in the grains, November beans are trying to get back over $12. Yesterday, the funds were active sellers of beans following USDA's bearish report. There's also talk that the Chinese may have bought a few cargoes of U.S. beans for February and some cargoes for Brazil for March. I guess the inverse in cash prices is forcing them out into the 2022 market versus the nearby market. And certainly, both beans and corn need demand to support the market and try to push prices higher. We're looking for the NOPA crush to come out around 155 million bushels versus almost 159 in August and 161.5 last year. Soybean oil stocks will remain around 1667 versus 1668 in August. There's an active trade of soybean domestically in China, and also, we're seeing meal prices at 13-month lows on concern about demand. Versus the expected increase in crush after new crop. Palm oil prices are higher where the rest of the Diane futures are lower. There's India announced a reduction in their tariffs of veg oils. August, they had 1.7 million tons of imports, and now we've got oil share here in the board crush back close to 49%. Weather-wise, improved weather mostly worldwide. We've got rains in Brazil. Last 2 days we've got rains in Argentina. Rains have finally stopped in the northern plains but have replenished soils for next year's crops. And we have a line of thunderstorms from Wisconsin down into Texas. So the rains in the eastern corn belt could slow harvest there. But I just think that right now there's not a lot of hot spots weather-wise to push the market higher. We did note that EU corn prices fell yesterday on talk of higher yields. But we do note that in Ukraine, there's talk about lower corn acres because of higher cost of production, and they could increase barley and sunseed acres for next year. In Europe and Russia and Australia, wheat prices were all lower. Yesterday, it seems like there was a tag team going on between lower U.S. and the world followed, and then U.S. followed the world, and really got the markets a little bit oversold given the fundamentals of lower world milling stocks and the fact that January 1, Russia might be out of the export market. And in 2022, U.S. hard red winter wheat prices are competitive for buyers. We also know export sales delayed until tomorrow because of Monday's holiday. And Argentina's attaché lowered their soybean crop to 49.7 versus the USDA's 51 million tons. So we'll see if crude oil can push through resistance. We'll see if the dollar has gotten to a high level and reaching key resistance, and if the grains can rebound going into the rest of this year. As always, these are my thoughts, not those of ADM or ADM Investor Services. Have a safe and profitable trading day, and remember, always treat people like yourself would like to be treated.